The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Well, before we get into the charts, let's take a look at what's going on at a macro level. Now, on the geopolitical front, Australia has officially recognised a Palestinian state, along with Britain, Canada and Portugal, in a move intended to promote a two-state solution. The development has been condemned by Israel, while Republican members of the US Congress have accused Australia and the others of legitimising a Palestinian terror state and threatened repercussions. This comes as Prime Minister Anthony Albanese arrived in New York ahead of an expected informal meeting with President Trump on Wednesday. Well, in the US, FOMC member Neil Kashkari foreshadowing 2 additional interest rate cuts this year, saying, "I believe the risk of a sharp increase in unemployment warrants the committee taking some action to support the labour market." And the Policy Setting Committee's newest member, Stephen Myron, saying, "I will do independent analysis based on my interpretation of the data, based on my interpretation of the economy, and that's what I will do." Well, the US 2-year Treasury yield rose to 3.57%, the 10-year up to 4.13%, and markets pricing in a 90% chance that the Fed funds rate will be cut by 25 basis points at the next meeting at the end of October, with around 4.5 more cuts in total in this easing cycle. Well, the US dollar index closed up on Friday about 0.3%. The Aussie has fallen back below 66 US cents, currently at 65.8. All right, Bitcoin just below 115,000. Let's get across the charts. David Scutt joining us from StoneX. Scutty, welcome back. Good to see you. So let's take a look at, what is going on in the US economy at the moment, obviously with the Fed having adjusted that Fed funds rate because of the weakness it's seeing in the jobs market. What else are they looking at?
G'day, Andrew. Great to be back. And yes, I sometimes question what else they are looking at, because they seem to be very dismissive of our inflation data at the moment and very focused on that payrolls report in particular, and maybe missing some of the signals out there in the economy that are not so weak. And it just reminds me, the backdrop at the moment, of exactly what we saw 12 months ago.
All right, well, let's go bring up that first chart just to reiterate what you're talking about.
Yeah, so look, this is the Fed funds futures curve, and this is looking at a year from September last year. And you can see that we had a couple of weak payrolls reports. We had Jerome Powell speaking at Jackson Hole, a very dovish outing. And at one point there, we had 250 basis points worth of cuts priced into the curve over the next 12 months. Fast forward to where we are today, and over that period, we got 125 basis points, so half the amount that markets were pricing. Then when you look at what's going on today, it is eerily similar, the backdrop.
All right. Well, that takes us through to the next chart. Let's just bring that up. What you're seeing, just to how many cuts there are priced in as well.
Yeah, look, so you mentioned at the other top there, we've got a Fed funds rate now being below 3%, where it's supposed to be the nadir. And the backdrop is exactly the same. We saw some weak payrolls reports in summer, July and August outing, and then another dovish set of remarks from Jerome Powell at Jackson Hole. And again, I'm just starting to go and question, when you look at some of the other economic data outside of what's going on in payrolls, does it justify the need for upwards of another 100 basis points plus of cuts over the next 12 months? My guess is probably not. And to me, that's one of those catalysts that could go and spark a rebound in the US dollar in the weeks and months potentially ahead.
Scotty, I mean, there are some concerns, obviously, that stagflation is going to become entrenched in the US, particularly as we see the effects of those tariffs coming through. What do you think the prospects of that are?
Well, at the moment, I agree that, and as a one-off, the impact of tariffs on goods prices is likely to be just a transitory affair. But where it can get complicated, if the economy is running at a pace where it's sufficient enough to go and generate inflationary pressure, so start to go and put downward pressure on the unemployment rate. And at the moment, if you go and exclude that payrolls data that we've seen recently, the huge downward revisions, the unemployment rate has only glacially been drifting higher, and not a lot. And looking at what some of the recent economic data is, and this is the GDP Now forecast from the Atlanta Fed, it's got a seasonally adjusted annualized pace based off data was received so far in the third quarter, north of 3%. That is miles above the US potential growth rate. That points to an increase in inflationary pressures and downward pressure on unemployment. So for all the focus on payrolls, what we're seeing in other economic data holistically is a much more resilient and strong economic story.
You also question, well, there are a lot of questions in regards to the Fed independence. What do you make of that at the moment? I guess particularly with that latest appointment of Stephen Myron.
Yes, I'm sure that he's going to be very independent in his analysis and how he goes and sets policy. Of course, he's the person who predicted 150 basis points worth of cuts in the latest set of forecasts. But I thought it was really interesting this week, or last week with that Fed meeting. We saw Christopher Waller and we saw Michelle Bowman, two Trump appointees who had dissented at the previous meeting. They voted in line with the rest of the committee for a 25 basis point cut. Yes, Moran was well and truly out on his own, and really that avoided the worst case scenario when it came to that Fed independence question. I don't get the sense from either of those two other governors that they're going to go and set policy based entirely off the political backdrop and the pressure that's coming through there. So it puts a lot of pressure on what's going on with Lisa Cook and whether she can go and retain her spot as a governor, and also what Jerome Powell does when his term as chair ends in May next year. He's entitled to stick on until January of 2028. So I know the markets are concerned about a loss of Fed independence, and I can see it clearly in the background too. But the first instance we had to go and test that theory, it was eradicated pretty convincingly. So again, one of those question marks about the downside we're seeing in the dollar coming through of late.
All right, well, let's go to the dollar. What we're seeing there last week, it did fall to a 3-month low. Where to now is the question.
Good question. And when it comes to potentially what the tea leaves are saying here, the price action, I've got to say, both on a weekly and a daily time frame, is suggesting that we've at least seen a near-term bounce. So just to go and explain this chart, left-hand pane, we've got the daily DXY chart, the US dollar index. On the right-hand side, it is the weekly chart. So we saw a piercing pattern on the daily chart of the day of the FOMC meeting. So the price gapped lower, set fresh lows, and then reversed higher very rapidly in towards the close. Now that is a notable reversal pattern, and we're seeing since then the price has continued to go and move higher and broken a very minor downtrend. But when you look on the right-hand pane, I think that's much more interesting from a weekly time frame, and you can see that I've marked on the chart there other really notable topping and bottoming patterns that we've seen in the DXY. And the latest one is a bullish pin candle, which is again one of those patterns that you see around a potential market bottom. And what we've seen in the past is that when you get these signals in the DXY, they typically lead to gains at least over a period of weeks and sometimes months in the other dollar. So when you put the fundamental side of the equation in and you put what the price action is telling us right now, I would not be surprised if we've just seen a near-term bottom, and potentially it could be the start of a pretty meaningful retracement.
All right, that is a key point to watch for there. Now, of course, Scuddy, US dollar weakness, broadly supportive of gold. Where do you see that going at the moment?
It is. Yes, it's interesting when you mentioned gold in the previous segment there about what was going on with the strength as well at the moment. Of course, US dollar strength would typically go and work against gold, but what we saw on the charts was a bullish engulfing candle on the daily time frame, and I think that explains a lot of the reaction we've seen today. It's also a fairly quiet session in Asia. Yes, Japanese markets are on, but they're going to be offline tomorrow, so I suspect that there's not a lot of activity going on in Japan at the moment. So maybe that's also contributing to it. But yeah, gold is continuing to go and trend higher, broke to fresh highs, and there's nothing on the charts that I can see in the near term that suggests we're anywhere near a top at this point in time.
Scuddy, great stuff. Thanks for getting us across the charts. Thanks for joining us on StoneX.
Great to be here. Take care.
And that is the trade.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.